Palantir is hitting record highs, prompting Bank of America to rise their price target to $75. The big question is, are we at the start of a major uptrend, or could a setback be on the horizon? November has been nothing short of astronomical for Palantir, with the stock climbing over 60% and seemingly setting new records almost daily. We're looking at a company that's now worth $148 billion in market cap, making it the 106th most valuable company globally. Look, it's impressive, especially when you consider where they were just a year ago. So what's behind this incredible surge? First up, their third quarter earnings knocked it out the park. We're talking about a 30% year-over-year revenue increase to $726 million, beating what analysts expected. Both their commercial and government sectors showed substantial growth, particularly in the US market. This kind of growth is a clear indicator that their business model is working and scaling effectively. The commercial sector growth is particularly noteworthy because it shows that Palantir is successfully diversifying beyond its traditional government contracts. They're not just landing new clients, they're expanding their relationships with existing ones. This is crucial for long-term sustainability and reduces their dependency on any single revenue stream. And let's talk about their AI game. Their artificial intelligence platform has been turning heads, with analysts putting Palantir at the forefront of AI advancements. This isn't just another company jumping on the AI bandwagon. They've been in the space for years, developing and refining their technology. Palantir also recently moved from the New York Stock Exchange to the Nasdaq Global Select Market on November 26th. This isn't just a simple change of address. This move could put them in front of more tech-focused investors and potentially get them included in the Nasdaq 100 index. That's a big deal that could drive even more demand for their shares. Being included in major indices means index funds have to buy the stock, creating a new source of demand. Bank of America thinks $75 is the target for Palantir, but $100 per share is the more likely destination. It is a major psychological level that stocks below that mark gravitate towards. $75 just sounds like a bit of a random number, and one of the first rules of sound investing is to ignore opinions, even your own. Analyst projections have a long history of leading investors astray. I keep it simple and focus on how stocks below $100 typically behave, which is targeting every $10 incrementally as mini targets. If Palantir breaks above $70, we'll look at $80, then $90, and finally that big $100 mark. This step-by-step approach keeps us grounded, dictated by stock price, not noise and opinions, which means avoiding getting caught up in the hype. Understanding this was a revelation for me, which meant I made better decisions, which resulted in better returns. But here's something critical to note. There hasn't been any correction or retest of the key $50 level as yet. This is natural market behavior we typically want to see when a stock breaks through a significant level. When a stock aggressively shoots through a key level like $50 by around 35%, as Palantir did in November, it often sees an equally aggressive correction back to that level. Now, I'm not saying it's guaranteed, but you need to be prepared for that possibility. It goes without saying that Palantir will have a strategy in place to reach $100 for its investors in 2025. They're heavily investing in their AI platform, which isn't just about following trends. It's about creating genuine value for their clients. They're expanding both their commercial and government sectors, exploring strategic partnerships, and maintaining a strong focus on profitability and cash flow. Their continuous innovation in product development could be a major driver for future growth. The AI platform deserves special attention because it's not just another tool. It's a comprehensive solution that helps organizations make better decisions using their data. This is particularly valuable in today's complex business environment, where data-driven decision-making is becoming increasingly critical. The challenges Palantir face are concerns about their high valuation. Analysts have even downgraded the stock, saying they need 40% growth for 4 straight years to justify the current price. They're also heavily dependent on government contracts, and they're facing intense competition in the AI sector. These aren't insurmountable obstacles, but they need to be factored into your investment decisions if fundamentals play a part in your analysis. The competitive landscape in the AI and data analytics sector is particularly worth noting. While Palantir has a strong position, they're not operating in a vacuum. Companies like Snowflake and Databricks, and even tech giants like Microsoft and Google are all vying for a piece of this market. Palantir's premium pricing strategy could become a challenge if competitors offer similar capabilities at lower price points. In terms of stock price action, every day is uncharted territory with Palantir setting record highs with no previous history of uptrends. This is a challenge with investing in newer stocks without established performance patterns. We can't look back at historical data to see how the stock typically behaves in similar situations because these situations are unprecedented for Palantir. Adding to this volatility is the significant presence of retail investors. From what I have read, they own approximately 50% of Palantir's shares. This ownership structure amplifies volatility as retail investors tend to react strongly to market news and price movements. While this can drive rapid gains, it also makes Palantir more susceptible to sudden and sharp declines if sentiment shifts. You simply need to follow the bull trend towards $100, but protect yourself with solid risk and exit management. This means setting clear stop loss levels and having a plan for different scenarios. As just mentioned, be prepared for the possibility of a decline back to $50 before the uptrend towards $100. You need to already know if you will hold through this decline or exit and re-enter when it bounces off $50. These rules must be clearly stated in your investing plan and not just be an afterthought. Not in your plan means holes, and that means leaks. A successful investor doesn't make mistakes and instead makes careful, deliberate decisions. To help you avoid common pitfalls, watch this video where I share my rules for replacing consistent losses in your portfolio with consistent profit.